Welcome back to the Hills Property Panel. The purpose is to keep you updated with the Hills District market and the broader Sydney market that can affect the Hills District. Welcome, Dr. Andrew Wilson.
Yes, thank you very much. Great to be here again.
And Stu Benson.
Good to be here yet again.
Thanks for coming back,
All
gentlemen.
Good. Yes.
And the idea is to get the broad picture across Sydney and then bring it down to a local level with Stu auctioning the local properties, working with local vendors and agents. And Dr. Andrew Wilson, if you can give us the summary or a bit more detail about what is actually happening out there in the marketplace, please.
So off and get running now, right? Certainly we've had another very interesting month, not just in our housing markets, but also our economy. We've had some remarkable data in terms of our labour market. We had the June unemployment rate released by the ABS a couple of weeks ago, and that was just unbelievable. We've now got an unemployment rate of just 3.5%. We're now tracking lower than the US in terms of our unemployment rate, which is quite unusual for Australia. But we've now got the lowest unemployment rate in history.
Right.
Certainly since we've been taking the monthly surveys.
Okay, lots of people in jobs.
Well, everybody's got a job. That's the point. I mean, everybody who wants a job can get a job now.
Okay.
And it wasn't just this record low unemployment rate. It was also when we look at another labour market factor, which is the participation rate, right? Now, the participation rate measures the proportion of the workforce, of the population, that the workforce is. So that's everybody, and what percentage of everybody has a job, right, or is looking for a job. Now, we also had not only the lowest unemployment rate in history, modern history, but we also had the highest participation rate. So that means we're now dragging people into the workforce that have basically never been in there before.
Incentivising.
Well, because they think, well, hey, this is great, I can get a job, wages are rising, so it might have been retired, they might have been, whatever, self-employed, but they're now back into the workforce in record numbers as a proportion. So it just doesn't get any better than that. It's not as though we've got a low proportion of the population actually working, so that gives us a low unemployment rate. We've got a record proportion of people from the population working. So this is an amazing economy. And of course, we're not going to find out for another few weeks what the wages situation is, but I'm sure that will bounce to a higher level than we've seen for some time. But a lot of anecdotal evidence is showing us that people are bidding up wages. Well, of course you would. We have a chronic shortage of workers now. So workers have the upper hand and they are taking advantage of that. They're looking for, they're bidding, they're getting their labour bidded up by looking for other work or asking their employer to pay more. So these are really great times.
Well, if we're all in jobs and we're getting better pay,
Yes.
we can pay back these interest rates.
Well, that's the whole point, Stu. Now, we continue to be in a very strong position in regard to higher rates. Now, higher rates will continue because, unfortunately, this isn't good news for the Reserve Bank and their task in bringing down inflation. Because as we're getting paid more, it's like, wow, beautiful! I'm getting the bigger TV, I'm getting the couch. Maybe I'm going to even buy another house. But the point is that those higher rates are now being offset by higher incomes. And it's not just the higher incomes, we've also got near record levels of savings to draw on. We've had all those government handouts. We've still got the buffer. So the buffer's 3% over what your new mortgage loan is still. But now you're getting higher wages to cover the buffer, which is now obviously higher because of the higher interest rates. So it's all working quite nicely at the moment. And of course, we've got to remember in terms of interest rates, only half of all households have a mortgage. So it's like, well, what do they care what interest rates are doing? And they're getting extra wages, those that don't have a mortgage, to increase their wealth. Now, it's not good news for the Reserve Bank, as I mentioned. We have an interest rate decision coming up, of course. We will almost certainly see an increase. Really, I think it's maybe going to be a decision between maybe 0.5% or even 0.75% increase, because we know that also the inflation data that's coming out for the June quarter, which unfortunately is telling us what happened 3 months ago, which is, well, who cares? What does it matter? So it's tough for the Reserve Bank. And just mentioning that, the US and other similar advanced economies, they get inflation data every month. So they're not looking back. So they're actually tracking inflation and wages every month.
Okay.
But we're doing it quarterly, which is every 3 months. So the data that we're going to get, the latest inflation data, will tell us what's been happening back in April and May.
Okay.
You know,
Yeah.
and of course the big point to that is that in April and May, that's when fuel prices were at their highest. Now we've seen the price of oil come down recently. It's still high, but it's certainly come off its peaks that was during the June quarter. So it's really not going to tell us anyway. But the Reserve Bank will have to act on the data, and that's why we're likely to see higher inflation again, and also a move to higher rates. But the other end of the pineapple, of course, is that we're enjoying this remarkable economy at the moment.
Well, let's talk about the market, the
Yes.
property market. How does that?
Yeah. Well, interestingly as
reflect on the
well,
property market?
the data.
Volumes.
Well, you know, we track
clearances.
data on a daily basis. We're coming up to the end of the month. We certainly had declines. The Sydney market declined. House prices declined around about 2% over June, right?
Right.
But I'm tracking a decline of around about 1% for July. Now, this is preliminary data yet, but certainly we're looking like, and other capitals are a little bit the same, but for Sydney, certainly we're looking like we're starting to feel our way to the bottom of price declines. And we can sort of correlate that, and this, of course, is your business, Stu, that auction clearance rates, yes, they're not 80% anymore, but they're sort of holding at the high 50s. And they're not getting down to those 40% clearance rates, which we saw during a similar period in 2018. It looks like the auction market's also holding and finding its floor, and new listings are also holding as well. New listings are still around about the levels we would expect for this time of the year. They're higher than where they were a year ago, but that's because we were in lockdown a year ago. But certainly the numbers of new listings coming through, which are falling, of course, because of winter, are not falling at the level you would expect if confidence was flat. So a lot of early signs that the market's just starting to feel its way to the bottom, that strong economy, and I'm sure perhaps you're seeing those sort of signs as well.
It certainly feels that way out there. I mean, look, one hot day doesn't make a summer, and so we're always cautionary when we see 1 or 2 weeks of the clearance rates stabilising and prices starting to feel. But we've had probably 5 or 6 weeks now where we're sitting around the same level of pre-auction sales, on-day sales, and sales post-auction. And any price adjustments that we're getting on auction day or pre-auction seem to be sitting around the same sort of percent of movement that owners are willing to accept before they draw a firm line in the sand and say, well, if you go below that, I'm not selling you the home. And that sort of pushback from a seller saying, no, I won't go lower than that, tends to be when we kind of find our bottom of this phase of the cycle. And
I purchasing after their sale.
They
so
are.
they think they might pick it up on the other side.
There's definitely a lot of that. If we we always talk about buying and selling in the same market, and if they can know what facts and figures they're playing with and go and maybe make up that perceived loss on the next purchase because that same seller is having to make the same decision, we're still seeing the wheels turning, the cogs. It's not grinding to a halt, but it certainly feels like we've found our new normal. And as you would know, I mean, I've been a follower of all of your data, and for years, we've worked together for years and years and years, but the Wilson curve tells us...
That's true, yes, bring it back.
The Wilson curve tells us that once we find this stability and confidence grows, we know what comes next.
Yeah, and I think that's the point, that once all the negative headlines are not correlating with what's actually happening on the ground, we start to move from that sort of we had FOMO last year, the year before, fear of being involved, right? And I now say we're into phobia, which is fear of being involved. So fear of being missing out, we want to buy whatever moves. Yes. Fear of being involved is no, we don't have a bar of this.
Right. We'll see what happens.
But I think that fear of being, see, that changes because you think, oh, hang on, if I'm not involved, I'm going to miss out here. So we start shifting to the FOMO sort of energy because it's like, and then spring's coming up, where all those decisions are about, hey, I want to get my property before the end of the year, I want to get out of my property before the end of the year. So it will be very interesting, stay tuned for the next episodes, to see how the August market, whether it does continue to stabilise.
Listings coming on board.
And we start to see listings as they do, start to rise with the coming spring energy in the market. So interesting times, but maybe you heard it here first.
Maybe.
And Stu, just to wind it down, into the front lawns and with the local agents every weekend, Inspection numbers coming through homes. Lots of inquiries, inspection
Last
numbers.
couple of weeks, it seems to have ticked up a little bit. Look, there's no denying we have been incredibly weather affected, and I would imagine that anybody who is flipping the coin and discretionary, do I want to start to look at houses? Do I have to go out this weekend? They're not. So whilst we're having qualified buyers still coming through the property, we're not getting the nosy neighbours coming out. They're just staying inside and watching reruns of Neighbours, on Channel 10 Peach. So they're not coming out in the wet. So what seems like more subdued open homes, I'm still finding we've still got the amount of qualified buyers. We're just not getting the nosy neighbours from across the street coming and having a look.
Yes.
Auction registered bidder numbers are still tracking around about the same as well. We're averaging about 3.5 to 4 per property, and we're still tracking at about 50% sold prior. So it seems to be, again, to echo the sentiments of what Andrew was saying, it seems to be that we're kind of finding a little bit of consistency. And, consistency can be high, can be in the middle, and can be low, albeit at the moment it's still low. It's consistent, and for me that's a good sign. It feels like we've found the bottom, or at least we're getting there. And that consistency, consistency breeds confidence as well. Confidence is one of the biggest X factors in the property market, and if confidence starts to seep back in, and that fear of missing out starts to rear its head, I think there's every reason to be confident.
Is there demand from people still moving from other areas to the Hills District? Is that still ongoing?
Big time. I would say that the largest demographic, if I was to segment it up into a pie graph, largest demographic that we have is the aspirational owner who's they're out of area, they're perhaps on the fringe of our area, and they've always highlighted that one day I'm going to live there. And with prices finding a lull, perhaps now's that time that they've been waiting for.
Okay, thanks for coming in, Dr. Andrew Wilson.
Yes, exciting news.
We'll see you after the next RBA announcement.
That's right, yeah. Thanks again, Stu.
Pleasure, absolute pleasure.
Thanks, gentlemen.